and happy Easter, resurrection, I think. Yep. Who's
Happy-
celebrating today? Hi, Alexis.
Hi.
Hey, do you celebrate?
I went to church today, so I don't
Ah.
know whether I celebrate, but I went to church.
My whole family, actually, we are Buddhist, we don't celebrate.
Okay.
But in the spirit of Easter, my sister actually let her dog celebrate and was hunting, eating the egg.
The eggs. So cute.
Yeah. All right. So that's a funny thing for me. I'm like, I thought we don't. But, well, anything for a pet, they get the never-ending love, unconditional, even the public holidays.
Better than
All right.
humans.
So I think there's a few interesting things that happen in the market. Shall I start first? Go ahead, and then we jump to fundamentals.
Yeah, go ahead.
Okay. All right, so first off, we'll start off with the currency index analysis, and let's see what we have here. I've already ranked them accordingly, so we'll go through from the strongest to the weakest. All right, so once again, hello everybody, I'm Lloyd, and in the meantime, if you have any questions, feel free to shoot off and ask. Now, Swiss is actually in a very, very interesting position right now. I want a weekly chart with the Swiss currency index. As you can see, it has poked his head up above a level whereby in the past, it doesn't stay for long. Now, here's a keyword. It doesn't stay for long doesn't mean that it won't go past there, right? So there is actually a good chance that price might shoot up and then back down again. So I think this presents us a very interesting opportunity to actually long Swiss for probably 1 or 2 weeks, and then we can look to short. You can see that it doesn't really stay up here for too long. Yeah. So pay attention is that for Swiss index, we can go on long. And even the last time you can see that when it poke up, it's only a 1-2 bar thing. Really doesn't stay for long. And then we can actually look for reversal opportunities. Now, it's not often they actually say this, but this is one such chance. Now, the next on my list is actually the British index. Yeah, interestingly, you can see that it get up and then it still has a positive close. Yeah, so as such, it has a pretty long way for us to actually long the British currency all the way to actually 130, provided if nothing much happens. Again, with the war ongoing and the British Parliament that is not really in an effective political mood right now, we don't know what will happen. But technically, this is what it suggests, right? So you can actually wait for any breakout or retracement, and we can happily jump in the opportunity to long the British pound. Next is dollar, the dollar index. Personally, I still having too much whether to change up my USD, but I think it's always, since I travel quite a fair bit, I think it's always good to actually keep the USD. Now, on the other hand, I do think that the dollar now is in no man's land in the sense that I don't know it's going up or down. Yeah, it's really actually in a level whereby previously you can see that this is a really, really good horizontal level. Yeah, it might either bounce or it might either break. I am really not too sure. As such, I prefer to actually not trade the dollar, anything dollar that is trend related. Yeah, I'm waiting for it to break out actually. Yeah. So if you trade two currencies which is in no man's land, simply just wait for a breakout. Yeah. I mean, if there's a successful breakout, usually we are trading the first retracement. We could be in for a very long ride, trend trading. Next is the Canadian index. You can see again, very, very nice boundary that it is bouncing about. So as such, it's in the middle. Again, I don't know it will go up or down, but this actually presents us a breakout opportunity if it happens. So by and large now, dollar cap, we can actually wait for a breakout to happen. Yeah. Next on my list is actually Kiwi. Again, you can see it is in a very similar situation to cat. It is in the middle of nowhere. Yeah. I can't say that. I mean, on a very, very wide picture, we can say that this is a downtrend. But bear in mind that I'm on a weekly chart, right? So over here, it may be simply just a retracement and price will continue falling. I simply don't know. There isn't much information that I can work on. Yeah. I only trade on things that I'm certain. Look at the chart, not very, very certain on the Kiwi. Moreover, if you look at it, some may argue that this is what we may be seeing now. A happy face for a reversal. This is what we call it inverse head and shoulder. The price might actually just do this. But it looks like a wink now. But until it does that, really we don't know what might actually happen. Yeah. For those keen on an adventure, sure, go on trade a reversal. Until it happens, I'd rather wait for confirmation. Now the Euro index, this is interesting. So Euro index is actually very, very near 110. Again, it got rejected once, two, might happen a third time. Yeah, so the keyword is might. That's why it isn't actually particularly weak. I say there's an opportunity for weakness to slip in. Yeah. So now whenever such opportunity happens, I'm actually on any Euro pairs, I might be looking out for a potential double top, triple top, whatever that happens, divergence to treat it as a reversal. Next on my list is actually yen. Now yen is actually, you can see that overall yen is just weakening. And then price is on a very nice level that it has been rejected in the past. Yeah, you can see that the past 3 bars really doesn't really give us much confidence where yen will go. Now, on the big picture, I'm still prefer to stick to it that yen will weaken, but I need to wait for when trading looking at yen pairs. Right now, I'll prefer to wait for a lower high before I jump in. And the last on my list is actually the Aussie index. Yeah, again, overall picture, it's sloping down. Price has reached to a level, very bearish bar. Right? In fact, it gap up and then it closed below. Yeah, so this presents us an opportunity to actually short the Aussie. So I have several pairs which I'm going to share what I'm going to do for the next week. I've got a couple of messages. Let me see. All right, so the first on my list is actually, if you still remember the list, we are going to short Aussie and we're going to long Swiss. So this is very clear-cut trading setup that we have over here, right? So what I'm going to do, price has essentially, I'm on a 4-hour chart right now. Price has essentially reached a double bottom. According to my analysis, you can see that it actually broke down already. Let me shift the line a bit. Yeah, so this actually presents us a trading opportunity as it is. Or if you wish to wait for further confirmation, any sort of a lower high, we are good to go. Right, so all these services is the first thing I'm going to trade on Monday or Tuesday. Very straightforward pair to trade. Next on my list is actually Swiss yen. Again, we are going to long Swiss. And yen is potentially short, right? So Swiss, again, very interestingly, you can see that price hasn't given us a very decisive break. So we actually need to wait for confirmation. Now, on saying that, the Swiss yen, Swiss is a particularly notorious pair for me to trade. I don't know if it happens to the rest of you, but I got quite a fair bit of stop out on Swiss yen. Yeah, so usually when I trade Swiss yen, as a trend trader, I put in only 0.5%. It's quite a messy pair for me to trade, but being a systematic trader, if the setup does happen, I will still take it. Now I need to really wait. I'm not looking for a breakout. I'm really waiting for a break and retest before I trade up. And even then, my risk to reward ratio, depending on the bar, might not be fantastic. If it offers me only a 1:1, I'll still grab it and then shift my stop loss to break even. I just can't ignore this horizontal level that's right up here. But that represents a trading opportunity. All right, so that's all for Swiss. Now let us have a look at pound Aussie. Right, so according to my list, I'm going to short Aussie. That means I have opportunity to long pound. Pound is actually the second strongest on my list. Yeah, so this is price-season consolidation, and on the 4-hour chart, this is really a nice looking trend. Right, no argument. Very nice uptrend. So I'm just waiting either for price to retrace back to previous high, and I'm going to put in a long order, or same thing, a break and retest of current high. Again, a very straightforward setup. And my fourth preferred pair to trade, which is really on the same category as Swiss yen, a rather messy pair, but might presents an opportunity for us to trade long pound yen. If it comes back to this level, it's not very clean chart, I have to admit. But if it does, I'm also going to trade long, and the risk to reward at best I would say is 3:1. Yeah, if it's a small bar, might be a 4:1, but let's see how it goes. Right, so these are the 4 pairs whereby I'm interested in trading for the next coming month or hit. Might not be starting up in the next week. Yeah. As always, I'm looking for a swing trading towards trend. Now, I'm going to bring up one more chart whereby it does interest me, which is the gold. I don't usually trade gold, but let's have a look. So I have a seasonality, or bring up the seasonality. You can see that for gold, all the way from 2023 to 2000, we got about 22 years and a half of seasonality. Now, April and May traditionally is a bullish one for gold. That gives us especially you see green side by side, that means there is a trend trading opportunity there. So good for us. So on gold spot or gold, whichever chart you're looking at, I'm on the daily chart, right? Price has break, retest. Whether you want to wait for a price action to confirm, up to you. But I'm saying that according to a chart, we do have an opportunity to go long. But at the same time, let's not ignore this horizontal level that is being obviously shutting out at us. So as such, I think it's quite tough for us to trade on the daily chart. We can actually go to the 4-hour or even a 1-hour chart so that our risk to reward will improve. So as it is, we can see that price has given us a double inside bar. That means from a Thursday and Friday bar. Yeah. So a double inside bar, usually the way I interpret is that it is waiting for a breakout movement. So we can actually start to park a pending order on the high. Yeah, I'm not going to short, I'm just going to long, and my stop loss is just on the low of the bar. Yeah, so this should easily give us a 3 or 4:1 up to this level. Since seasonality suggests that April and May, gold is going to continue going stronger, I'll probably just take half off the table and then see how well it can run. All right, so this is my 5 cents worth of analysis for the currency index and the additional chart of gold. Let me see if I have any questions. All right, so with that, I'll pass it over to Alexis. Let's see, is something wrong in the world? That's why gold is rallying.
I have no idea. A lot of things going on in the world. All right. Well, I don't really trade gold, but it has gone up quite a bit. I would say look for Ainsley. She's probably the best person to talk about gold. Instead, I would like to talk a little bit about the pound for now. So I've got a little article to share now. For those of you who have been following me on Sunday Fundamentals, you know that I've been waiting for the longest time to short pound. So it's not happening, hasn't happened yet. Maybe we still have to be patient. Maybe it's happening in the next couple of weeks. I don't know. Statistically, the pound stats does not look very good in the sense that it doesn't have the best numbers. All right. Currently, the pound does have a very high interest rate, but it's followed by very, very high inflation. However, why is the pound increasing, right? So this article that just came in, I think April 6th, so it just came in about a couple of days ago. I think this article kind of sums up what's happening in the pound. So, surprisingly, pound is the best performing G10 currency so far. You can see over here, it's got about 4.21% returns. It's touched its highest level since last summer. And then there was a lot of other write-ups about it, and they're talking about, why gold is going up, why pound is going up. The UK data is beating upward revised forecasts. Inflation is sticky, but the direction of travel is down. And I think reading the entire article, the conclusion I had is, that the UK economy, basically, it's in a surprisingly good sentiment, right? It has surprisingly good sentiment, I think, comparatively to for example, the US, which has a couple of bank failures, affecting close to it, comparatively to the euro side, which is, I think still suffering from, the backlashes of the high oil prices, which is currently not so high anymore. It's gone off a bit. So I think in a bit of a summary, right? The market has been expecting a pause on the pound. But it's really interesting that it has a very surprising push to the upside instead. All right, so this article is just showing that one way, in terms of why UK the pound is doing well is because they kind of feel that the pound is resilient. All right, so it's resilient, so it's a very sentimental, I think sentimental hint as well. And there are a couple of hints that this might be changing. All right, there's a bit of cooling on the cable. Net non-commercial positioning is turning a bit more bearish, in a couple of recent weeks. Anyway, take all this with a pinch of salt, all right? But what it does look like, which kind of is in line with Lloyd's currency direction, is that there still might be a little bit more strength coming into the pound, more so, because of sentiment more than I would say a fundamental basis of it, because fundamentally it doesn't have the best statistics. All right, so this is just some of a longer read on it. but I guess it kind of tells you that there is a positive sentiment going on somewhere in the pound, despite the not so good statistics, and there might be some kind of a continued bullishness on the pound. However, all right, being a fundamental trader over a medium to long term period, I am still kind of preferring to wait for that pound short. And again, a little bit of patience. I've been preaching patience for the last couple of weeks. A bit of patience. I don't think it's going to come instantly. The technicals are not quite right. And I think that what I want to kind of be ready for is for when the pound starts to turn towards the downside. So a couple of currency pairs that I will be keeping my eye on. Pound dollar is one. Pound dollar is one. Like I said, despite the, I mean, it would have been very hard to go short on the pound during this upward period over here, right? Because you can see pound has actually been trailing upwards. I wouldn't say aggressively, it's kind of trailing upwards. We have a recent pullback, one big green candle, 3 small candles pullback. Do I think it's going to turn around and go short? I don't think so. I think there is still a little bit more upside coming to the pound, just based off the technical levels, but what I want to be ready for is when the pound kind of wait for it to push back towards the downside. It probably will take a while, especially comparatively. What's been happening out there is, pound is getting a lot of positive attention. All right, Catherine, hi, for pound. Yeah, I mean, that might be it as well. The trade deals outside of the euro area, it possibly is, like I said, sentiment in the end, when we look at trading, it's a lot about sentiment, right? Where traders think the money will go in terms of safety nets, right? And I think pound has had a good, decent run. Probably more of, I personally will assume, is lack of better options. All right, if lack of better options is like if you can't quite put money in the US because of bank failures, and there's a lot of indecision, a lot of question marks there. You're not too sure about the euro. Where else do you want to put your money in temporarily? So I think that was the previous run of pound. But again, I don't think it's going to go up very, very long. While the market sentiment is still slightly bullish on the pound, I still prefer to short the pound. I know it might be a bit contrarian over here, but the fundamental statistics does not support pound being overly strong. Okay, that is my worry. That is my worry on that. And I feel that a lot of the pound positivity is actually priced in from the interest rates, right? They are expecting another interest rate hike in May. So a part of it is probably the preemptive understanding that the pound will be increasing interest rates again in May, and this might again give that push to the pound to the upside. However, I'm probably going to be a little bit patient on this. I will want to short the pound. It's just probably not yet. All right, it's not the best time to short the pound yet. For a couple of currency pairs, what I would like to look at for pound short is pound Swiss. Probably has started moving a little bit to the downside, but again, the pricing is very rangy, right? It's very rangy. It's not the kind of and it's a very short distance towards the downside. So it is not the kind of short pound trending kind of trades that I would actually prefer. So I kind of think it is actually okay if the pound goes up a little bit more to give us more downside distance, right? Because when we start to short the pound, we want to be able to short it for weeks and months to be able to take that long, nice trending move. Until that happens, I think as much retracement or as much push to the upside is best, because the further up it goes, meaning that I got a further way down to trade it. So by all means, go up for the pound, but what I will want to do is patiently wait for the moment it starts to turn. So pound Aussie has again done the very nice push towards the upside. This is more from the softness of the Aussie than the strength of the pound over here. The Australian dollar has paused its interest rates, right? The last interest rates, it actually stopped increasing interest rates. So this added to the softness of the Aussie. It has broken the 1.85 level. I would like to see this slowly trickle up towards the 1.88. Like I said, I really would love it when it starts to hit those extremes. All right. So while I'm not ready to short the pound Aussie now, all right, I'm hoping to have a little bit more move to the upside and just be patient on those shorts. Now we just have let's jump to Japan for a little while. There's a new governor in town, Ueda. And whilst there is a lot of talks about Japanese, whether Japan will start to increase its interest rates, question mark, I don't think it's going to happen so soon. We do have to give this new governor some time to warm up his bench, start planning on directionally where he wants to go. But what is interesting in the 10-year dollar yields is that the last Friday, all right, if I haven't really mentioned it before on the Sunday show, I'm going to nag at it again. If you are trading the dollar yen, it is always good to keep one eye on the US government bond 10-year yields. They are quite closely related. What is really interesting to see is the 10-year yields actually had a very bad 1, 2, 3, 4, 5, 6, 7 candles in the red, and then one big nice green candle on Friday. So the question is, we might possibly see a little bit of a dollar yen push to the upside short term, just from a technical perspective, because of the way the yields are moving. While I don't expect a lot of leeway on it, I do think the dollar yen. Okay, I do think there is a little bit of distance to go. And again, what I do like about this chart is that I don't really have, we didn't really get that break of this low over here. So it does look like we have that first higher low. It will start to get really interesting if this high is broken from a technical perspective. But we do have a nice, I would say, ring low happening over here. So I think short-term upside on the dollar yen has a bit of potential, and it's more from the indecision of the yen, or a question mark on the yen side. While there is a lot of speculation that the yen might be getting stronger because of this new government, I don't think it's going to happen so soon. So we might see this go a little bit more sideways, a little bit more upside, maybe meander slowly, maybe back towards the 1.37 level. I really doubt that price will get back into this area. I think that era is kind of over. I don't think price will ever get back to this area in at least the next year or so. All right, so new governor in town. What might be interesting to see is where I would say it's more dollar yen might be in for a very decent range trading period, right? From the 1.30 level back up to the 1.35, 1.37 back down. So it's probably going to squeeze sideways a little while because there is question marks, on the Japanese yen side. While the yen is still soft, with talks of the new governor increasing interest rates, might give a potential upside on the yen, but it's generally a big question mark over there. So until something a little bit clearer comes up from the government side, I am really more prone to trade it very more on the technical levels. What is really interesting is I've got a new article on the Singapore dollar. Let's go here. All right, so what's interesting is over here, this is 4th of April. So Singapore is seeing tightening monetary policy as inflation remains elevated. Now, this is the 6th time in a row it's going to tighten its policy. So for those of you who have been trading the dollar Sing with me, what's really nice to know that, we are reaching a potential level of, I would say, a potential level to short this dollar Sing, right? Based on the strength of the Sing dollar. So again, the Sing dollar isn't a very fast moving currency, but it does obey certain levels very well. So what I am trying to look for next week is if this 1.335 level is going to be obeyed, right? And whether or not that sentiment kick from the news coming out here will push the dollar Sing back down towards the 1.31 level, coming from a two-pronged direction. One is from the perceived strength of the Singapore dollar, and number two, from the perceived question mark happening in the dollar market, right? So if I'm talking about the US dollar, I think my sentiment is pretty much the same as Lloyd. I'm not too sure where it's going to go. Might go up, might go down, depending on what's happening over there. But what is pretty clear in Singapore is they've already told you, they've already told you they are tightening its monetary policies, right? So regardless what's happening in the US, on the government side in the Sing dollar, there is potential further strengthening on it. So what I want to see is on the shorter time frames, whether we could see that reversal happening straight away here. Will it have a false breakup to the 1.34 level before it comes down? But either way, I prefer to position short for the dollar Sing at least for the next 2 to 3 months, while this tightening effect kind of this tightening kind of takes effect. All right, so give that Singapore government time to do its policy magic, and we are just going to follow along the direction for this. So this should be a relatively easy trade because the government has kind of already told you where potentially the Sing dollar is going to go. Right, it's now a matter of using those technical signals and finding the proper entry, be it on the H4, be it on your daily. So don't straight away short the dollar Sing on Monday. Instead let the market breathe a little and wait for the technical levels to show that the government has kind of stepped in and it's done its intervention, and when we start to see those clear technical moves towards the downside, then we just follow in. We should be pretty safe over there. But it's interesting at this level because price is already consolidating in this window for quite a while. So if we go down to the H4 a little bit more, let me. So if you go down to the H4, you can see that price didn't go anywhere near the previous two highs over here. So it kind of indicates from a technical perspective, maybe there's already a loss of momentum over here. So it's really interesting to see how this next couple of candles open up, whether we can at least level number one, trade the dollar Sing back to the 1.32 level, and of course if it can break this level, we might find dollar Sing back at the 1.31 level again in the next couple of weeks. All right, so this is I would say medium term trade. Is a bit slow moving, but when it starts moving, it gets a little bit more clear in its direction. So once it starts to trend towards this area, then we're just going to follow in as closely as we can until the government says it's going to stop. So that's my eye is definitely on the dollar Sing over here because of that article. I think a clearer direction will be coming up instead of this sideways movement over here, which didn't really help our trading in the last, I think, 2 weeks. It just went absolutely nowhere. All right. So this is the dollar Sing. Other currency pairs that I will be looking at, I think I'm looking at a bit of dollar. There is a bit of weakness coming into the Aussie, mainly because of the article that says they have stopped raising interest rates. The Aussie dollar kind of is kind of flat, and what I am also waiting, I know again might be a bit contrarian over here, so I just want to show you guys what is really interesting that I would like to look at is based on interest rates, the Aussie dollar still has one of the slightly lower interest rates, meaning that it has got room for interest rates to go up. And again, while potentially I would prefer to long the Aussie, I don't think it's now. Maybe we have to wait for it, another month or two. But the weakness in the Aussie is because I think China hasn't been performing up to par as well. And on that note, on the note of the interest rates, the currency pair that might surprise us would be the euro. All right, so euro might surprise us because it has a 3.5% interest rate. Comparatively, it's not the highest among its peers. But what has happened is inflation actually popped down a nice big chunk. So previous inflation was about 8.5, right? And then just from the next the reading after that, the 1 quarter reading later, inflation is 6.9. So it has had what I call the biggest improvement in the euro side. So again, sentiment might be back in there. People might be a bit more immune to what's happening in Russia, Ukraine. I think business is kind of as is. So I am looking forward to whether or not we could take advantage of this euro sentiment. It has been going up for a while. If we take euro dollar as a par, it has been going up for a while. It does look like it's trending still nicely towards the upside. So I'm a bit more prone, or I think the currency pairs I would look for will be Euro Aussie. Okay, Euro Aussie's trending pair looks a bit stronger. It's about hitting the horizontal level. If price actually breaks above this level, I think the Aussie would have a little bit more. The Euro Aussie would have a bit more leg to go. Maybe about the 1.68 level. All right, but from a fundamental perspective, the Euro Aussie does seem to be trending quite nicely. I think it is. It might be just a good deal to just follow the trend towards the upside, given that Euro's inflation figures has vastly improved from the last reading to this reading. I think more positive sentiment will be kicking into the euro in this next season. All right, with that, I will end off. So again, quick summary. I'm looking at probably Euro Aussie towards the upside. euro dollar upside, but maybe just with a little bit of caution on what's happening on the US. Dollar sink towards the short side because of Singapore dollar's monetary policy. Pound I won't mention because it's like a slow-mo little snail, which I will have to really wait patiently for it to turn around. So maybe I'll wait till Lloyd says, the currency index has changed, then I will start to look at it again. But in the meantime, these three currency pairs are what I'll be looking at for the shorter, maybe next 1 or 2 weeks at least.
Actually, just now, I think since 2 years back when we hosted a show together, when we have diverging opinions, I noticed one pattern happening. I mean, sometimes we get both of us are right. I mean, because we trade different time frame. But let me show you what I meant.
Okay.
All right. So now, when you say that, because just now when I was promoting pound to long, I already know that there was a horizontal level that you hit, right? So actually, last year I did a bit of a study on seasonality. So across the board, seasonality actually gave each of the pair 1 to 5% increment of profits. So seasonality actually does work, at least to my trading style. Now, so when I look at the pound index for the moment, this is what I see, right? April, I know it takes kind of small, but you can see that April, 8 out of 11 times, I would say 10 times, all right, we don't count 2023. 8 out of 10 times, pound actually increases in April, sorry. Now, coming May, 8 out of 10 times, it actually devalues. So there's a very, very stark contrast. So what it means to me is that pound, it might have its last run in April. Then when it comes to mid-April, we can actually get ready for a reversal happening. Yeah, because in May, if pound 8 out of 10 times is going to fall in value, simply just short it, right? Unless there's another fundamental that come in.
Oh, I really love this. Yeah, I really love this. It just goes to point to the fact that just be patient. I guess there is my patience window down there. I've been itching to short the pound forever. Lucky I didn't short it yet, but now I see this nice one. Okay, I'll wait for mid-April, maybe May. Since your seasonality is in my favor in May, let's just wait for that and see what happens.
So because in May it already devalues, right? That means the move actually possibly will start in the mid-April already.
That means we've got another 1 week to wait patiently.
Yeah, so I think there's a very good chance for us to actually short pound, especially if you catch the exact correct. I know it's tough, but if you did, that means you look at it from May, June, July, August, September. Pound is all the way down. So if you catch it at the really near the high, that means you're actually potentially trading the first lower high. Then that's where you actually be going for a really good trend trading move.
Yeah, I mean, I do like this analysis because again, it points out to, I think the main difference between retail and professional traders is professional traders, they're really patient. So some of the senior traders that I've been following, what they are doing is they're just waiting. But the moment it starts to move, that's where, I think traders like Ainsley as well, shows it in gold. She's so patient, but when it starts to move, then she makes a butt ton by just acting on and not, and not just I think the call to action that trigger to action is a lot easier when you have not been losing money for a while, because if you're waiting, you're not losing money, right? So if you're not losing money by chasing trades and by taking unnecessary trades, then when the time is right and you pile in, that's where the difference in the psychology comes in as well. So I really like that the idea of it, that being patient kind of idea.
Right. So any of you catch the move on pound short in either mid-April or mid-May, buy coffee for Alexis. He's the one to give you a heads up. All right. With that, we're going to end the show. Thank you for joining us today.
Bye.
Goodbye.